Hi, my name is Vijay Chilkha. I'm Senior Vice President with AIF PMS Expert. And today in our show, which is Ask the Expert Show, we will talk about different products which are quite interesting for the people. And the topic which we'll be covering today is the AIF Category 3 Fund. Because now AIF Category 3 is much more popular among the investors because of its unique features. So they have open-ended funds, closed-ended funds, long only with some private equity also. So there are a lot of variations which a fund manager has an option as well as a client, and we will exactly know what are these, what are the benefits to the clients, and what is there for the investor to look in for. Hi, my name is Vijay Chilkha. I am from AIF PMS Expert. I'm the Vice President over here. And we have this show, Ask the Expert Show, where we are talking about the different products which are popular in for the investments. So today we will be covering a topic of AIF Category 3 product, which are in different variations like close-ended, open-ended. There are other products like it's only long only, which is in equities. There are the hybrid with some private equity. So because of these variations, it gives a good opportunity for an investors to invest in. And today we'll be discussing on this topic in detail with Mr. Sugyan Lohiaa ji, who is from Motilal Oswal AMC, and he is a senior vice president with them. So over to you, sir. So can you just tell me about this Category 3 fund? What are the variations? Or how the client will benefit in these investments?
Sure. Thank you for having me on your show. And the topic today of AIF Cat 3 is very close to my heart because at Motilal Oswal AMC, we are the largest manufacturers of Category 3 AIF products in the market. We've been in this business now for 9 to 10 years, and we manage about 17,000 crores.
That's a big number.
Which make us the number one player. Yes, thank you very much. And all the different variations of Cat 3 products which you mentioned are offered by us and are actively participated by thousands of Ultra HNI and HNI families across the country. So, firstly, I want to start by highlighting that AIF, which is Alternate Investment Fund, is fully regulated by SEBI. And it is a wealth creation product just like mutual funds and PMS. After the new regulation in 2015, we have seen explosive growth in the AIF side. So literally from just a couple of 100 crores of AUM in the industry, currently we are seeing about 2 lakh crores of AUM just in Category 3. And then Category 2 and Category 1 would add up to that separately altogether. Category 3 products are typically used for equity investments. And as you mentioned, there are two versions. One is a closed-ended fund, one is open-ended fund. And both have their unique advantages. An open-ended fund is one where the product would run perpetually. There is no maturity date. So it's very similar to a mutual fund structure, right?
Oh.
Because mutual fund schemes continue to perpetuity. And investors would come into the open-ended AIF version with a minimum of 1 crore, which has to be given altogether.
Okay.
So it typically suits Ultra HNI investors who are investing in equity markets for very long periods of time, as well as with a higher commitment amount in mind, such that they can come in with 1 crore altogether, participate in the markets, and then keep on adding to that as they go along. Closed-ended funds are simply funds which have a maturity date. So that maturity date can be 5 years in the future, 10 years in the future, 15 years in the future as well, depending on the investment objective and how long we would like to run that strategy as manufacturers for the investor. The major advantage of a closed-ended fund is that the commitment amount of, let's say, 1 crore rupees can be fulfilled in parts, which is what we call the drawdown mechanism.
Okay.
The most popular drawdown mechanism is a 10 into 10 SIP style of investment.
Okay.
Right? So even that
So
1 crore.
installments you can pay that.
Correct, absolutely. So what that means is that the 1 crore can be split into 10 equal installments of 10 lakhs. So the first installment of 10 lakhs is due with the application. Then the remaining 9 installments come over the next 9 months. So the first and foremost advantage of that is that the 1 crore commitment gets spread over multiple market cycles. Our markets are dynamic. They are consolidating. Sometimes there's slight correction phase. Sometimes it's going up. And just like a mutual fund, SIP captures all the different phases of the market. Even the AIF investor in closed-ended gets to capture the market volatility over the next 10 months and doesn't have to commit and pay up the full 1 crore commitment at the start itself.
Yeah.
It also makes it easy for investors to plan their cash flow. Most investors own their own businesses or are successful salaried people. In that case, you have a clear idea of when are your future installments due, right? And then you can accurately plan your cash flow accordingly.
So depending on the cash flow of a client, he can choose whether they have to go with open-ended or a closed-ended.
Absolutely, that would be the primary decision-making criteria to decide between open-ended and closed-ended. However, in closed-ended, there is one more further advantage apart from just the drawdown mechanism through SIP. We also give the opportunity for the investor to suggest to the asset management company of when should the future drawdowns be taken.
Okay.
Since we are closely tracking the market and the fund manager is managing the portfolio on a live dynamic basis, we give the opportunity for investors to put in 30% of the commitment now and 70% to be kept with themselves till the time the fund manager makes the call for the future investment. Now, what are the conditions in which the fund manager would decide to call for the future drawdown? One could be a market correction, in which it could be a fantastic time for lower valuations to be captured by the future installments to come. Second could be new market opportunities opening up. Right? Quarterly results are coming out, and also government policies are updated quite regularly. New industries and businesses are emerging. There is leader rotation as well in the market. So these can be big opportunities to capture through the future installments, which are then decided by the fund manager. So instead of the onus being on the investor to time the market or on the advisor, here the fund manager is stepping in and saying they will take a call on when to call for further capital from the investor. So these are advantages which are not available on PMS, because in PMS again the onus is on the investor to select when to participate in the market. Also in PMS the 50 lakhs is due altogether. Upfront. There is no reduction of the 50 lakh. Yes, you may park part of that 50 lakh in a liquid strategy and do STP. But that still means that a minimum 50 lakh check has to be given with the application.
Here the client gets a time.
Yes.
To give as per the drawdown.
Yes, and you may choose which of the two drawdowns is more beneficial, depending on the need of the client and as you mentioned, the cash flow of the client.
I think there is one more thing in category 3. There has to be minimum commitment from the AMC also.
Yes.
Which is also differentiated with PMS, right?
Absolutely.
Yeah.
So the minimum commitment by the sponsor is 10 crore rupees per scheme. So the first check always comes in from the sponsor. However, at Motilal Oswal we do things a little differently. We are strong believers in skin in the game. So our promoters as well as our treasury investment in our own funds adds up to about 9,000 crores, of which a significant part is in our AIF and PMS strategies as well. For example, our flagship offering is called the Founder Strategy,
Yeah.
which is currently about 12,000 crores of AUM.
Mhm.
From that 12,000 crores AUM, about 1,000 crores is from our promoters and investors. Promoters and treasury. So we are going far, far beyond the basic SEBI requirements and making sure that the biggest investor in each of our strategies is our own promoters.
So that gives a confidence among the client also. The larger the skin in the game of the AMC,
Absolutely.
the more confident the client feels about the product, right?
Absolutely, that's 100% true. You see, because there will be challenging times in the market, and in those challenging times, the comfort to the investor is that the biggest pool of money has come from the promoters themselves.
Yeah.
And our promoters are very much active in the business, and our chairman, Mr. Ramdev Agrawal, is considered a foremost expert in terms of investing himself. So you can be rest assured, you can be confident that the promoters will be very much involved in the success of their fund strategies, more so because their own capital is allocated.
So can you just throw on light on what's the hybrid option in AIF also? Which I
Absolutely.
think which is not possible in PMS.
Correct. So by hybrid option, we mean that we are offering AIF strategies which have long only equity, which is on the listed side, as well as unlisted securities as well. Now, when I'm talking about unlisted, I don't mean the typical unlisted securities which is offered by brokers, which is commonly available, which is called over-the-counter stocks, which can be purchased by anyone. But we are really talking about exclusive ideas which are coming out from our private equity stable, as well as exclusive ideas which bring together the competencies and expertise in equity of Motilal Oswal Group altogether, versus just focusing on the expertise of the asset management company. For example, we have bought in our client's portfolio NSE about 3 years back, when it wasn't as popular as it is today.
Okay.
And at that point of time, the stock was identified as a group level for being a potential multi-bagger, and we, being part of Indian capital markets, recognized the value unlocking which could happen through NSE. Today, the investors whom we bought NSE for as part of the portfolio are sitting on 400% return just from that one single stock. And then when we buy these private equity ideas, we don't allocate 2-4% to them. We give a very healthy allocation of 8 to 10% in any particular stock. Right? So we like to keep it, the unlisted private equity component, we like to keep it at 20 to 30% of the portfolio. And then 60 to 70% of the remaining portfolio is the listed space. And
so that gives a proper balance of listed and unlisted.
Absolutely. SEBI allows Category 3 AIFs to have 49% unlisted securities. Right? So by having 30%, even if the unlisted securities grow in value very quickly, we can be sure that we won't be breaching the 49% limit by the regulator. Typically, this 30% can be divided between 3 to 4 ideas. So you can imagine that the range of allocation will be 7 to 10% per idea.
Okay. And even in this, there is an open-ended, closed-ended, or the hybrid has only closed-ended?
The hybrid funds would be all closed-ended.
All closed.
But within the hybrid funds, we have two options.
Achha, what's that?
We have two winning portfolios right now which are offered in closed-ended AIF. One is the founder strategy, which I have been mentioning. The other is our mid to mega strategy.
Okay.
The mid to mega strategy, as the name suggests, is a mid and small cap portfolio where we are looking for crossover companies. companies. For example, a mid-cap company today, which can become a large cap in a medium-term period of, let's say, 4 to 6 years.
Okay.
Also, we look for small-cap companies, which can become mid-cap.
Okay.
So, our founder, Mr. Ramdevji, did a wealth creation study about 5-7 years back, which identified that crossover companies actually deliver exceptional wealth creation to investors who are able to identify early. And then he went on also to give certain criterias and filters to follow, which can help the fund manager identify such companies in advance to them becoming crossover companies.
Okay.
So this is a 6-year running PMS with us. It started in December 2019. 5 years outperformance out of 6 years, about a 25% compounder since inception. And it has a history of identifying multi-baggers. So already 10 multi-baggers have been identified in the live portfolio of PMS investors. So since we had this winning portfolio running with us, we have now started offering mid to mega in the AIF Cat 3 platform, where 70% will be mid to mega and 20 to 30% will be the fresh private equity ideas which come in. And within this now, you can do the 10 into 10 SIP formula for drawdown, or you can do 30% now and let the fund manager advise on when to come in with the remaining 70%.
So the option is given to the client, or it's altogether different product?
No, it's the same product. Just we have different share classes for investors who choose to come in SIP route versus investors who choose to come in drawdown, or even investors can choose to give the entire 1 crore together. Right? So only the share class will vary. Otherwise, underlying portfolio, it's a pooled product, so everyone gets this same portfolio.
So based on your cash flow cycle, you can choose any of the 3.
Absolutely, that's right. And this same hybrid opportunity is available in founders. In founders, we have been fundraising in the product. Actually, the name of the product is Select Opportunity Portfolio Series 4. We have already raised about 1600 crores in that product. And about 850 investors have been onboarded. And Founders itself is a very popular and successful strategy in the market. The concept is very simple, that in the Indian context of doing business, we have seen that promoter-led companies are delivering more shareholder value growth than the other 2 cohorts, being MNC professional or PSU. And what is found is that these portfolios, these companies, because they have the involvement of the promoter at all times, the promoter is taking charge of the growth of the company. The promoter is also taking charge of the vision of the company. The promoter is taking charge of the culture of the company. And the promoter is ensuring the expansion of profits across all market cycles. So being led by the promoter in all fields, the profitability which shows up in the hands of the investor is much better than the other 2 cohorts, which is MNC and PSU.
Because they must have a higher skin in the game.
Absolutely. So we have a basic criteria that 26% of ownership should be with the promoter. Then only will qualify the same to be a promoter-driven company.
Apart from this, any other framework that you want to talk in the selection criteria?
Oh yes, absolutely. So we have very well-defined selection criteria over here. The filtration process starts with the top 500 companies by market cap. Second, as I said, minimum 26% ownership should be with the promoter. We also count senior management ESOP as promoter holding. No one does this in the industry except for us. Now, whenever there is a CXO level manager who has significant ESOPs, then they have spent several years in the organization, and they tend to have very long tenures going forward as well. And majority of their personal wealth creation is attached to the success of the company. So we treat them as promoters.
Okay.
What that means is that I'm able to invest in BFSI companies, I can invest in banks, NBFCs. I can also invest in digital platform companies, where the promoters may have given up equity to private equity investors or venture capital firms, but towards the end they always get back sweat equity from the ESOP pool. And both these segments of the economy are very integral parts of the growth of Indian businesses, and therefore having them is critical. After that, we like to buy profitable companies, so we look for 100 crore PBT, profit before tax. We like to have good quality businesses, so that's 15% return on capital is required for us to see. We want to see the quality of promoter is very good. So we look for vision, we look for execution, we look for competency, we look for succession planning, because a lot of Indian businesses are family owned. Right? So is there a proper documented succession plan in place for the future generations to take over?
So proper quantitative and qualitative measures
both are absolutely required to build a successful portfolio. And lastly, then we build a very high growth oriented portfolio where the earnings of these companies are far superior, to the tune of 3 times, 4 times the earning growth of the index. So we are growth investors, and we like to pick up companies which are growing their profits very quickly in the future. That's how we achieve an overall portfolio of about 25 stocks.
Okay. And this is the option available in open-ended and closed-ended for both?
In fact, it's available in 4 options.
Achha.
Open-ended founders, closed-ended founders, where you can enter in different installments. Third is it's available in the listed equity and unlisted equity hybrid option.
Achha.
And
so 70% listed or 50% listed would
yes.
be founder companies,
yes, 70%.
And rest will be the in unlisted.
Yes, about 30%.
Okay.
And the 4th avatar is that founders is also available in GIFT City.
Okay. So, tell you, GIFT City is only for the NRI clients?
GIFT City is for NRI clients, GIFT City is for foreign citizens, GIFT City is for OCI holders, GIFT City is for investment entities which are made outside India. So these could be companies, these could be partnerships, these could be LLCs, these could be trusts, all are welcome.
So I think we have covered a lot of things in category 3. So just to wrap up, I'll just give you a brief of that. So category 3, we have open-ended funds, we have closed-ended funds. In closed-ended funds, we have 3 options to pay the client in all staggered way. First, 10% in 10 installment, first option. 30% at the start, and rest as per the demand from the fund manager. And there's a third option where they can pay upfront. So all the 3 options are available. And the fund is available in long only, where 100% is in long equity. There is a fund which is an hybrid, which is listed as well as unlisted, a combination of both. And it's available in a GIFT City format, closed-ended format, open-ended format. And we have also discussed about the frameworks in stock selection. And the 2 funds which we have discussed prominently, it's founder fund and mid to mega fund. So I think our viewers have got a good explanation of all this product, and I'm very glad that you shared your time and explained our clients on all these things. And this has helped our clients in a big way. So thanks for coming in our show.
Thank you for having me.